Good morning all and welcome to this morning's video. So I apologize in advance for the little bit of feedback which you may be able to hear on this video. I've tried to find the root cause of the problem, but once again it's a bit of a mystery to me, so we're just going to have to make do. Hopefully it's not too bad. But anyway, I'm going to start off with the pairs I haven't watched today. Those are euro pound and euro dollar. So euro pound, which was a slightly higher risk position when I was breaking it down in the week, has now become a low risk position, and I shall touch on that when we get down to the lower time frames. So on the higher time frames, I can see the things that jump out at me is that we have this 1 2 3 touch structure there, okay, with the 1 2 3 middle section, 1 2 3. We tap into this exchange of liquidity here, which caused a big runoff to the downside, which smashed through this brick wall low here. We also tapped into this exchange of liquidity sat just above, so I'm not surprised that we got a runoff which replicated to some degree the impulsive leg up which preceded it. Okay, often we mirror what happened to the left on the right. If we're going to go short, we mirror the bullish momentum on the left that occurred, and vice versa. Okay, the other things that stand out to me is that if we just clean this up a little bit, the other things that stand out to me is that we have a near miss to this low, a near miss to this low, a near miss to this low, and a near miss to this low. Okay, where there was a big sharp move up there. Okay, so when we tap into all these exchanges of liquidity, it makes sense to me for a potential impulse correction continuation to push lower to take out these lows. Okay, so as we drill down, so at this moment in time, price has no business coming all the way back up because it's washed out a lot of the liquidity. So you might be thinking, well, why is it coming all the way back up here then? Well, let's drill down to the lower time frames and find out. Okay, so there's another key aspect of this. If this was, for example, because this does look, this is quite a bit of a pullback relative to the impulse down which has preceded it. If this was a move to come back up to test the high before selling off, okay, which could happen, we have to remain neutral, then we would likely have responded from an area of liquidity down here. Okay, so let's say we'd reacted from here, for example, then I would be more open to the idea of this coming up to test the highs before selling off. But we've kind of responded from nothing. Okay, so we didn't really respond from anything, we just near missed to this low. Okay, so that gives me a clue that this is more of just what we call sort of a V-shaped recovery, okay, to tap into. If you just look at where, so we had the impulse down and then we had the corrective move started here, okay. So the start of a move is always the most valuable, okay. So we started correcting here, okay, and then even here, even though these were red candles, look at the low momentum of them, okay. So it's no surprise to me that we come back up. And one of the reasons earlier in the week that I said to you why, when we were in, where are we on the 4-hour chart, when we were in this area, okay, I was looking for a tap in here and a push back down, but I said to you that even if we got that, it was a slightly higher risk position because you could easily be tagged in, tagged out, and price moved up to this area. And the reason I said that is because this was where this was the origin of this correction. Okay, so the origin of the correction always holds more weight, but now we've tapped into the origin of the correction. Okay, so any moves from there become, depending on all the other factors put together, this becomes a low risk position. Okay, we can see that we're kind of on the 1 hour, we're kind of stalling. Look at this low momentum. We're kind of stalling in this area. We do have to be mindful of the fact, if I measure this, the whole move, we have pulled back just over, what's that, about 60% of the move. But I've said previously that it's often the case that corrective pairs such as euro pound will pull back about 60% of the move before carrying on in the forecasted direction. Okay, that's not abnormal, like with pairs such as euro pound, Aussie Kiwi, CAD Swiss, etc., that correct for a little bit longer. They do tend to pull back slightly more than what I would anticipate on a more impulsive pair, which is more of a 50% pullback. So I'm not overly concerned that this is pulled back about 60% of the move. because that is in keeping with the characteristic of the pair. But regardless, what I'll be looking for today is the following. I will be looking for an impulse down. So we've got to this area of value. I'll be looking for an impulse down below this area of inflection, okay? This area of interest, okay? Because if we get that, we would have washed out all of the liquidity that was sat there, all of the liquidity that was sat at this hook point there. And if we were trading below there, we would have negated. So if we got a push down above that, this could still be part of some kind of bull flag to push higher to test those highs. However, if we push down below all of these little highs here, okay, and we get a correction afterwards, we would have washed out all of the liquidity that was sat above all of these, and we would be trading below this high as well, okay. And then if we get the consolidation afterwards, that would likely be the banks and the bigger players stacking their orders for the next wave to the downside, and that would negate the possibility that this is a move to come back up to test this high, okay. And if we just zoomed out, so I would be well positioned by this point. I would be well positioned if we got that on the higher time frames. We would also be trading below here, okay. We would also have, if we just put that in its box a minute, so we would be trading below this high as well. We would also have this kind of, it's a bit of a shallow one, but we would have a head and shoulders pattern, okay. So I would be well positioned on the higher time frames. I'd be well positioned on the lower time frames. The sequence isn't fantastic, but it doesn't always have to be, especially on pairs such as euro pound. And then I'll be looking for that 1 hour impulse down below area of interest. So there, a 2-touch 15-minute continuation, so 6 to 8 corrective 15-minute candles. Okay, and then if I could filter this on the 5-minute chart to look for a risk entry, so within the flag, so if we came up to test the first high and I could get the risk entry within rather than on the break of this correction, then great. And then what I would do is I would be able to manage this. I would measure it from range to range. So the range that we would be playing would be there. What do you know? There's a reason why we mechanically manage on using this 90% area, because that's often where price pulls back deeply, which just so happens to be bang on where this sharp move was here. So sharp move down, sharp move up. So in terms of this overall range and that higher time frame low there, okay, what I would do is I would set a mechanical management take profit at the 90% area, which would give us something in the region of 7%, and then I would trail my stop loss accordingly simultaneously. So that is euro pound, and that would be an example of a low risk position. Okay, so if the market was going to take me out from, if it did that and took me out, why would it do it? Well, it would likely be coming up to test these highs again. Does that look abnormal? Yes, it does look abnormal. Okay, even if we were to draw on, if this was some kind of middle section, well, that doesn't look normal either. The size just wouldn't be quite right. So, and we would have tapped into the start of this correction. So I'm satisfied that this would be a low risk position onto one which is definitely a higher risk position. And if we just zoom out, so euro dollar, okay. So you can see that overall we've been moving down. This is not the most impulsive move down, but then we have this impulse correction potential continuation to take out here, take out this low, okay, and then potentially we react from there, and then this would become like the middle section. We would have this kind of structure and this kind of 1, 2, 3, which lines up with that, okay. And you can see, so yesterday I was looking at, if we just drill down to the yesterday, this did look like a bull flag to push higher. So with the impulse correction potential continuation. So when we get a larger correction sat above an area of value such as this, so the start of a correction, this is usually a move to the upside. However, if we just zoom out, what do we have? We can't ignore the fact that we still have this kind of evening star formation, okay, and the higher time frame always holds more weight. So when I did my forecast last night, even though the lower time frame looked like a bull flag to push higher, I was still looking at this as a a kind of evening star formation and look at the big wicks above, these big wick above, big wick above, big wick above, bigger wick above than that tiny wick below, that indicates to me selling pressure, okay, not buying pressure. And obviously, as I said, the higher time frame holds more weight, and that's what the bigger players are paying attention to. They're not camped out on the lower time frames like the many of the people that you see on TradingView and certainly on places like Instagram. Okay, so that's why we always do top-down analysis, and I was under the impression that because of this, regardless of the lower time frame structure, we would likely just drop out, and that seems to be what's happening at the moment. Okay, so if we just have a look, so yesterday with this bearish candle which closed below this kind of star, if you will, on the 4-hour chart we have the reversal structure. Okay, so we have that. We have the middle section there. We even have a 1, 2, 3 last leg. We break above, catch people the wrong side of the market who think it's going long. You can even see when it breaks above, it comes back down. You can see where people probably thought this was a retest to get long. It comes back down. Many people probably thought this was a retest to get long, and they all get washed out. Okay. So same psychology over and over again. If I just drill down, you can see that we're starting to consolidate below this structure now, which is a good sign. So what I'll be looking for in instances such as this, so this is not a typical sequence. So if we are going to continue to the downside, we don't normally see large corrections like this at the start of the run, okay? And when it is the case that I could easily be trapped into this, so yes, we've broken below, but we haven't really broken a massive amount below. When it's the case that a correction that I'm looking for could just be part of a larger correction because of how the sequence started, so this impulse large correction continuation, I always wait for a 3-touch flag to confirm that this is not actually part of the larger structure which has preceded it. So, if you had something like that with just 2 touches, in this instance, you could easily be trapped into something like that, which just becomes a larger bull flag, which then taps into this sharp hook point. Okay. And then you go, oh, yeah, I see what was happening here. Okay. Especially given how correctively price has moved down all in all on the higher time frames. It wouldn't surprise me if price did that. Okay. So in this instance, what I'll be looking for is a 3-touch 15-minute continuation, not a 2-touch, okay? And then if we got that, that would negate the fact that this correction is actually part of the larger correction which has preceded it, and that would confirm as much as possible a move to the downside. But regardless, this would still be a higher risk position because even, excuse me, even then you could be tagged out. Price does something like that, and then we push higher, and then all of a sudden this was just volume accumulation because we broke below that low. This was just volume accumulation to push higher because of the fact that we tapped into that low and this corrective move down all in all. So does that look abnormal to me? No, it doesn't look abnormal to me, what I've just drawn on. So therefore, a move to the downside would be a higher risk position, and I would not take this position unless another trade or another entry had put me in profit by 2% for the month. Once again, no entries have shaped up for me this month, so therefore I haven't been able to place a trade. But if, for example, euro pound was to put me in profit by 2% for the month, then I would be open to this entry. However, if euro pound did put me in profit by 2% for the month, that would mean that the euro had sold off, which would likely mean that euro dollar had sold off as well. So therefore, I probably wouldn't be able to take both in any case. But that's the logic behind it all. If we just drill down, if you just look at this on the 15-minute chart, just to see how this consolidation is going, at the moment, this just looks a little bit underdeveloped. One of the things you can do is look on the 5-minute chart. And what I'm looking at is this consolidation here may act as the start of the flag if we get one. And the reason I'm saying that is because we have this little structure here where price started to sell off. We got the near miss. Okay, so a near miss to this high, which gives me a clue that this, if this flag does form, that will be likely the top. Okay, But at the moment, it just looks like a bit of consolidation. You start to see these things over time. But what I wouldn't be surprised if it happens is if we get something like this, where we get a bit more structure rather than when the candles are all bunched like this. That gives me a clue that the structure is not ready, okay, to commit to the downside. And even if you tried to get short here, you'd be tagged in, tagged out, and then price could just keep doing this for a period of time. So if we got something like this, that would line up, and then we zoomed back out. That could be ready by sort of around lunchtime, which is, it wouldn't surprise me if euro dollar started to sell off, and then we would have that. We would have a 1, 2, 3, which actually tapped into the start of this consolidation, okay, which was there. Okay, but we'll see. We'll see what happens. I'm going to set I'll tell you what I'm going to do on the fly. I'm going to set an alert just to see if we push up to that area. Okay, but I'm just going to monitor this because it could just push a little bit lower and then start correcting a bit lower. So I'm just going to monitor this. I think I'll set an alert for an hour's time just to monitor this, see how it's going. But that's what I'm going to be looking for today, folks, with these two pairs. I hope you've enjoyed this video. I hope it has provided you with some value. And of course, if I place an entry, I will bring you a recap of that trade, whether I'm out of the trade, whether I'm still in it, regardless. But I hope you've enjoyed this, and I'll see you again in the next video.